Hello, I'm Asif Farouk of Finextra and I'm here with Simon Newstead of RBS and we're going to be speaking about immediate payments. Simon, thanks for joining us. So you said in last year's World Payments Report that immediate payments was emerging as a key industry trend. Do you still think that's the case?
Yeah, we did indeed. So if you go back to last year's report, I think the trend towards near real-time retail payments was one of the top 35 emerging industry and regulatory trends. And that's absolutely borne out by the fact since. And in fact, I think it would be fair to say it's gone from an emerging trend to a fully emerged one, because in addition to existing countries like the UK that launched its faster payment service right back in 2008, as well as countries like Switzerland, Poland and India that have these types of services already. Just in the last few weeks, Singapore's gone live with its version of an immediate payment service. Planning in Australia is kind of going full swing towards a potential, I think it's 2016 implementation. And in the US, they're having a set of kind of exploratory discussions. The Fed put out a consultation paper into the case for this type of service. So I think it's a very big trend now for a whole bunch of reasons, ranging from customer expectation, technology development, and sort of regulatory drivers towards development of this type of service. So it's a range of factors, but together they are generating a lot of head of steam for just this type of initiative.
So the UK's had the immediate payments capability now since 2008. What are some of the things you have to take into account or factor in when implementing an immediate payment solution?
That's a good question. And there's a whole range of factors. I think from a purely, if you start with the practical ones, there's a set of choices to be made around, for example, what messaging standard to use. So when faster payments launched in the UK, the choice was ISO 8583, which is the card standard, partly because ISO 20022 wasn't really available for those types of services yet. I think ISO 2022 is probably the obvious standard you'd use if you were starting now. So there's choices of standards, there's choices of things like settlement cycles. So obviously the service itself, certainly if it follows a similar service to the UK model, is likely to be 24/7 by 365, but that doesn't mean interbank settlement needs to be real time. It will typically be on a net sender basis, but it's important to get the sequencing of interbank settlement in terms of when those cycles happen, how frequently, on what days, to get the right balance between efficiency, cost, risk and all that stuff. So there's those sort of practical considerations. From a bank's perspective, there are practical issues, so how you need to adjust your channels, your internal processing engines, potentially your staff hours, your service levels, to a service which is 24/7. So there's a whole range of practical considerations, but I think perhaps the biggest thing to think about if you're kind of embarking on a faster payment style project is the fact that having a near immediate payment service, certainly from our UK experience, has almost rebaselined customer expectation in terms of what should be possible now you've got this capability. So if you look in the UK market, the existence of faster payments and for example, from an RBS perspective, the use of our app for mobile banking for consumers has absolutely exploded over the last few years. And the fact that you can check your balance, make payments immediately, see them come in immediately, has really changed customer behaviour, customer expectation, and is leading to a demand for all sorts of new services on the back of having this new immediate payment capability. So I think that the changes are very fundamental and are more than simply the introduction of a new payment channel.
Okay, and what types of innovation can actually be built on the immediate payments capability?
Yeah, and again, that's a kind of good question and follows on from the previous discussion. So having got that core capability in place, it is very clearly something that can be leveraged and built on. So if you kind of look back at again, I'll use the World Payments Report from last year, charted the continued exponential growth in mobile payments and e-payments. And a service like faster payments is an obvious platform that you can build on in that space. So to give a very live recent example, the UK banks with the Payments Council launched a new service called Pay'em only at the end of April, so very recently, which does exactly that. So it allows me as a consumer to pay you in near real time using only your mobile phone number. So as long as you've registered your mobile phone number with your bank, there will be an appropriate link with your account, and the underlying payment method is faster payments. So it's a very good example of how you can combine and build on that type of capability in all sorts of interesting new areas once you've built the core service. I mean, equally in the e-payment space, it's an obvious mechanism that you can build on. So it's, again, I think back to my kind of previous answer, that there's a fundamental shift of expectation that's upon us now. So it started in a small number of countries. It's definitely gaining traction globally, if you look at the examples of where these types of projects are now happening. And it's materially changing the way that we pay, and it's materially changing the landscape when you combine it with new technology.